Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look in the gold market as usual. So gold right now represents the very interesting asset, especially in the current, so-called non-common conditions. So where it's interesting what could happen with the different assets, and gold is not an exception. So in the fundamental analysis that we have provided today in our weekly report, gold shows interesting dynamics. So first of all, at the first glance, speculative positions are dropping. So speculators close long positions currently. Maybe that has happened before the long weekend, maybe because they see that market is coming to the overbought on the weekly chart. So difficult to explain why particular speculators are selling the gold. But the net long position is dropping for the third week in a row. Although this drop stands on the background of the contraction of the open interest as well. So it means that speculators just closing the longs rather than opening the new shorts. But at the same time, if you'll take a look at the ETF statistics, you'll see that the storage of the ETFs stands at the all-time highs. So the physical gold, physical demand from the long-term investors reach the top level. And it means two things. First of all, our fundamental analysis leads us to conclusion that longer-term trend is still intact. It's a bullish trend, as we suggest, and we talked even in the last year in the autumn about this. But in the shorter term, that could be some pullback on the gold market. Trying to combine the technical analysis with the CFTC report that we've got, the data from the CFTC report, we're trying to create the trading plan that could match to all the data, all the numbers that we have currently. So if we'll take a look at the weekly chart, on the weekly chart, gold market stands at the overbought. So if we saw that gold market mostly ignores the oversold overbought on the daily chart, but on the weekly it works pretty nice, and every time when the market hits the overbought, oversold on the weekly, it shows some response. It could be different. Sometimes it's deeper retracement, sometimes it's just a flat sideways action, but as a rule, every time when the market hits the extreme levels, it shows response. So currently, gold stands at the overbought. That's the first point. Second, we see that speculators starts to sell. It means that from that standpoint, gold really has a chance to show the pullback. It's a dropping of the demand for the gold in the shorter term. Finally, we have the setup on the intraday charts that suggest reaching of some targets that we have specified on Friday. So actually, today charts on the intraday time frames stands the same as on Friday, because on Friday market was closed and there are no changes in the picture that currently we have. So combining on all this stuff leads us to interesting setup that we would like to show you on the daily chart. Particularly speaking, guys, as you can see on this picture, we could get kind of the reverse head and shoulders right on the top, because we know market stands at the overbought. It suggests the pullback. Pullback probably should be moderate, and taking into consideration the harmony of this bottom that stands to the left side, this mirrors the same. It should be somewhere to the 16 even area. As a result, we could get the reverse head and shoulders pattern on the daily right on the top, which actually satisfies the all conditions, as the CFTC data, as the weekly overbought, as the stops on the intraday charts, so the pullback, and then upward continuation. So for us, it means that first, on the intraday charts, we will keep an eye on first, this is our chart, guys, reaching of the XOP target, and we will keep an eye on the possible reversal on the gold somewhere around the previous top, 1705, approximately 17 even area. So if you hold the longs according to the steps that we have discussed, this will be the point where it's time to think about the booking the profit, or at least protect your profit moving stops tighter to the recent price action. That's the first moment. Second, we will keep an eye on the possible response on this area. That will be the moment of truth. Once market will hit the XOP, then some response should be, and if it will be in the shape of some reversal pattern, for example, it could be kind of the hand and shoulders or something of that sort, that supports our idea. In this case, we will expect some maybe ABCD or something like that somewhere to the 16-10 area. That's our trading plan for the coming week. It means at the same time that that area will be our primary level to consider taking the long position again on the gold market, because right from this point, the new wave of extension of the gold market could start. This is shortly our trading plan that we intend to follow and see whether we will be correct on it or not.